Own assets or get left behind. That's the elephant in the room, and we're going to talk about it today. Before we do me a favor, like this video, subscribe to the channel, hit that notification bell. You get notified when I post new videos, assuming that you want to be. I'd appreciate it. All right, let's talk about it. So all this chaos going on right now with all these assets going through the roof, gold, silver, even platinum and palladium have gone crazy. Copper, all of it. Why am I saying own assets or get left behind? Because it's very apparent that we've got a collapse in fiat currencies, not just ours, but global. So yeah, the confidence in fiat currencies has collapsed. And nobody wants to cash out right now. And I don't blame them. What are you going to cash into? Dollars? Why are you going to do that? Why are you going to cash out into the US dollar? It's garbage. I'm not. The only time I'm cashing out is to take profits in order to catch these assets when they dip against the US dollar and acquire more. I'm creating my own money printing machine, basically. I'm finding the assets that appreciate the most, that have been in the short and mid-term, and I'm going in, I'm acquiring them, I'm riding the prices up, I'm taking profits, all right? And because they come down, not everything is up and to the right all non-stop. And so that's what I'll do. Get a little cash on the side, let it dip, come back in, acquire more. Ride it up, wash, rinse, repeat. That's the name of the game. That's how you grow your assets. I found this stat here too. In fact, cash allocation for institutional investors are pretty much not us. We're retail. We're talking about the BlackRocks, the big companies, the big money players, the ones that swing with the big bats. Is down. That their cash allocation is down 3.8%, and that's the lowest percentage in 12 years. That means they're unloading their cash and they're putting it into assets. To put that into simple terms, layman terms, that's what that means. That when they're holding little cash, they know that the reason why is because it's worthless, that needs to go do something, because you're losing if you're just sitting on with cash. And that's what I talked about. Why are you saving money? Don't save money. Saving money is a loser. You need to have emergency money. You need to have some of that. And I'm not saying don't save any money. I'm not saying your savings should be zero. You need to have some money for emergencies and stuff like that. But you don't need to be having huge piles of cash sitting around, or you're just not very smart. Not very smart at all. So the Fed will lose its independence. Rate cuts are coming into stagflation. We've already started that, and I think you're going to see more kicking up here. More rate cuts are coming between now and the end of the year, and probably into 2026. And global debt jumped from 14 trillion in Q2 to a record $337.7 trillion globally. And wouldn't you know that 38 per trillion of that is ours. So 38 trillion, so 10% of that is us, of the entire world is us. That's huge. So you're either buying stocks at record highs, piling into gold and silver, or buying crypto. That's it. Those are your only options. If you want to create a money printer that prints quicker than the United States government, and I'm not talking about the actual volume of money that you're printing, because you'll never outprint the US government. I don't think anybody will in the whole world. But you have to basically get your little money printing machine to print at a higher rate, not volume, rate, than theirs. All right, that's the name of the game. And so that's why you're seeing all this money going into tech stocks. You see money going to gold, silver, precious metals, and Bitcoin, crypto, is because you're looking for an alternative money, an alternative platform, I guess, for a new economic model, because they know it's a matter of time before the current one we have falls apart. I'm climbing this big hill, y'all. This one here is gonna put it to me, which, by the way, take a little break from the regular scheduled programming and tell you that at my peak weight, I was at 203 pounds, and that was a little over a month ago. I got on the scale this morning, and I had hit 192 and some change. I'm doing it. I'm getting it done. But this hill right here is probably going to help me get there to that 191 number and lower. But yeah, it's falling off of me right now. I haven't been on a weight loss regimen in my entire life until now. And let me tell you, it's not necessarily the most fun you can have, but I'm staying busy and I'm staying preoccupied, so it makes it a lot easier to get through. All right, back to our regular scheduled programming. I had to just put that in there because that is one of my things, that I'm losing weight. And y'all that have been following the channel from the beginning probably know that, that's a journey that I've been on. And by the way, if you're new to the channel, I appreciate y'all joining in. I'm Gen X guy. The new channel, been around for just over a month and a week. Has grown quite a bit, more than I would have ever imagined in this short period of time. And I'm a 52-year-old. I've been in tech for 30 years. I've been in real estate for over 20 years. I've got a lot of knowledge up here in this noggin of mine. And if I can help any of y'all out there make sense of all this craziness and this interesting and wild world we live in now, then that's great. I got some big plans, big ideas for the channel. Not gonna happen overnight, but anyway, glad that you could be here. If you're new, appreciate it. Do me a favor, subscribe to the channel, like this video if you would, and then hit that notification bell to get notified when I post new videos. All right, back to the topic at hand. Own assets or get left behind. I love it. That's true. Well, I don't love that we've come to this, but I do love that's that saying, because it's absolutely true. It's nice and simple, straight and to the point. Own assets or get left behind. And so corporations are investing hundreds of billions into AI, and governments will soon join the AI arms race, prompting more money printing. Yeah, I mean, now they say AI arms race, right? That's literally what it's going to turn out to be, because you're talking about a lot of power and a lot of capability with AI, and so it becomes a national security issue. It becomes a military issue, a national defense issue. So those countries that are jumping out in front of it and embracing it and figuring out are the ones that are going to have the strategic advantage. And so that's why you're seeing a lot of this pouring into it. And then it's pretty obvious by now, in just the short, AI hit the scenes. It'll be 3 years on, I believe it's December the 22nd of this year. It hadn't even been 3 years, and look at how far we've come with AI. And there are trillions of dollars being pumped into AI right now. And a lot of people speculate, are we in a bubble because of that? And comparing it to the internet.com amount of money that was plowed into that. And energy, I hear all this about energy. Do we have enough energy to sustain all this? Our energy infrastructure is not there, and to put up a nuclear power plant takes at least 10 years to do. And now I'm hearing about people, what they're paying per kilowatt hour of electricity. I saw a map the other day across the country, and how much it's just in the last few years has doubled. Energy prices are going through the roof. So yeah, I mean, I get it. I see that. But you got to understand that the companies that have been plowing all this capital into AI, these are strong companies, and they haven't even come close to exhausting the capital that they're putting into this stuff. Where in the .com was just, there was no real products, there was no real customers. It's just the companies were ideas on a napkin, and all this money plowed in there, and it all went bust. And then the strong ones, everybody kind of went punted, stepped back, and then you had some strong ones come out, and it kind of reset the deck of what the internet was going to be and how fast it was going to grow. So it's different this time from that perspective. Fiat currencies are losing their purchasing power, and asset owners are looking to defend against it in any possible way. As investors, we can only play the hand we are dealt. That sound familiar? That's all I tell you. I didn't design the game. You didn't design the game. It's the cards that we're dealt, and we have to play with them. And you can either choose to ignore the game. You can choose to maybe recognize the game, but you're not going to play the game. That would be option 2. Or you can play the game. There's 3 options that you have. And I'm going to play the game. Now you say, all right, Gen X guy, that's great. You know, you've been in tech for 30 years. You've started tech companies. You've done well. You've built them up to 7-digit companies and multiple of them, and you've done all this thing. You've sold millions of dollars worth of real estate. During all that, you've done a lot of things. But I'm a Gen Z, or I'm a millennial, and I'm not there yet. I've come into this world with a promise of an American dream, and it doesn't exist for me. Yeah, like we've talked about on the channel, you know, a Gen Z or a young millennial, one of those is maybe on the line there, you know, they have no chance of owning a home. How are they going to do that? And we've talked about that. So you say, okay, that's great. How am I gonna do that? Well, it's not easy, I'll tell you this, but I'll tell you how you go about it. First of all, you got to get your mindset right. A lot of this stuff is about mindset, right? If you go in looking at everything half empty, then guess what you're going to get? You're going to get empty or half empty. If you go into it looking at the glass half full, and you're going after it with motivation, passion, desire, the willpower, you know, the grab yourself by the back of the neck and get it done. Let's get after it. Let's go. You know, if you come in with that attitude and that mindset, then you're going to find yourself going to do very, very well. And so what I would tell you to do is you have to have an income. You have to develop an income. And in some cases, you might have to have more than one income. And that would not be only the case for someone who's young, but even for someone that's my age. I've got multiple income streams. And you never know. When one's down, the other one picks that up. When both are up, it's great. But the chances of both of them being down at the same time are very low. And if that does happen, then we got a whole lot bigger problems on our hands than that. So first, you need to get an income. And you've got to be very disciplined. You have to learn discipline. You have to learn about living below your means. You got to learn about going without. You've got to learn how to invest your money instead of spending your money or saving it. You got to learn that tonight we're not going to go out to eat. That's ultra expensive right now because of inflation. So you've got to be extra disciplined now. And the ones who do that are the ones that are going to come out on the other end doing well. If I take my daughter, for example, my oldest, she's 19. She's in the process of going to the Naval Academy, applying there right now. She's I guess you could say on the back side of it. But in the meantime, she's went and she's got a part-time job, especially a pretty good paying part-time job. They were in big need of her experience, and she had it in the golf business. So she's got, and it's actually turned out to be more of a full-time job as opposed to just a part-time job, which, hey, that's fine. She's got the time. So she's going in, she's getting these paychecks. She's made more money she's ever made in her life. She's only 19. And so I said, so now you get these paychecks, what are you going to do with this money? Because she's living with us at home to help kind of bridge the gap. I said, well, so you get a paycheck, what you going to do? She's like, I don't know, Dad, talk to me. What should I do? I said, well, and I ask it to her as questions. Ask her the questions and see I know what the answers are or what I think the answers need to be. I'm just testing her. And she says, well, you got this income. How much of it do you keep in your bank? Because you got to enjoy life, right? You don't need to go invest it all. You need to go buy some clothes. What's the point, right? You got to be able to enjoy life. You got to be able to do things. You're going to go out with friends and, hey, you got to have that, or what's the point, right? I mean, that's not a very fun world or life if you're just, you're doing absolutely nothing all the time. You got to go and find things that you enjoy. And unfortunately, fun things cost money. It's just the way it is. So I said, hey, what do you think? And she says, about half of my paycheck? I'm like, yeah, I like that. I'm picking up what you're putting down. That sounds good. I'm like, okay, so, all right, that's just generally speaking, half. All right, that's great. So now you can invest in 2 ways generally speaking, for her being 19 years old, you can invest it into short-term investments like in a brokerage account, and you can do a retirement, a Roth IRA. And I would suggest that you do both of those. You take money, put it into a Roth, and take money and put it into investing. And so it's basically quarter, and half. So you got half your money that you can pay your bills with and do your daily living, and then you have a quarter of your money that's going into retirement and a quarter of your money that you're investing. Let's start there. Unless you're new at this, it's early. Let's just start there and let's just test it for a month or two, couple months to see how it works. She's like, okay. She says, well, so she took this money, she took half of her paycheck, and she opened up a Robinhood account. For all you Gen Zs out there, millennials, this is what she did. She opened a Robinhood account, not a Schwab or not a Fidelity. It is old people accounts. This Gen X and Boomers have Fidelity and Charles Schwab accounts. Millennials and Gen Zs don't typically. So some of them probably do, but Robinhood's where it's at. And I'm invested in Robinhood, by the way, HOOD, and it's actually down a little bit right now. So Robinhood's they're mixing TradFi and crypto, where you can do both. And it's kind of like Coinbase, but they don't have near the crypto assets that Coinbase does. So they started TradFi, stocks, equities, and now they're moving into the crypto space. But I'm seeing them add new crypto every day, all the time. So she opened up this Robinhood account, and she had just a regular brokerage account. And then I said, hey, let's go ahead and open up an IRA while you're at it, a Roth IRA. And if you don't know the difference between a Roth and a traditional IRA, real quick, a Roth, assuming you're under the income levels, you can put that money in and now, and when you pull it out, when you retire, it's tax-free. You don't owe any taxes on the principal that you put in or the growth over the time that you held it. A traditional IRA is the opposite. You can put that money in now, you do get a tax deduction now, but when you pull it out later, you get taxed on whatever your income is at that point in time when you withdraw it. So if you're under I think it's around 250, 60,000 if you're married. If you're single, it's in the mid 100s. So if you're under that income level, it's Roth all day long. It's a no-brainer. So she took that money, put half of it into her Roth, and she took the other half and put it into her investment account. And so, yeah, in her investment account, what she buy? Bitcoin, Ethereum, Solana, probably a few other little Robinhood, some other stocks, some tech stocks. And in the IRA, she put it into some basically ETFs. She bought a little bit of the Bitcoin ETF. She bought a little bit of the Ethereum ETF. She bought into a couple tech VGT, Vanguard's tech ETF, probably one of the biggest ones out there, next to QQQ. And then that's pretty much it. The high risk at her age, high risk all day, no question about it. Because she has nothing, and if she loses it all, losing 100% of nothing is what? It's nothing. It's a goose egg. So she can afford to take the risk now and take as much risk as you can. So that's what she's doing. So, yeah, start acquiring assets now. I'm also going to get them into acquiring gold and silver, the actual real thing. And I've been acquiring a good bit of that lately. I don't really mess with it on the ETF front, though you could have and make tons of money right now with the run up with gold and silver. But I've focused more on actually getting the real thing. You need to get that first, and then ETFs would be my recommendation, because the whole point, if we are going to this the death of the dollar and this dollar debasement and the fiat currencies are going to die, things like Bitcoin, gold, silver, all those assets, which is the whole point of this video, own assets or get left behind. That's what you're going to want. So, and where can you go get that stuff? I like to go to ScottsdaleMint.com. To me, it's just a good site, and you can buy it. They'll ship it right to you. They've been around since 2008. I like the company. I like the CEO behind it. It's young, very cutting edge, very, very forward thinking. very got a good reputation. So I go to Scottsdale Mint, and I've priced them compared to some of the others, and their prices are just as good as anybody. Their service is great. They're fantastic. And then the other one's usmint.gov, our own government mint. That's another site that, you know, you get some great stuff out there on the usmint.gov. Some great silver coins and collectibles and sets that you can get, as well as gold and silver. Some really cool stuff out there. Now, it's at a little higher price, but that stuff is limited mint. A lot of it, not all of it, but some of it you can get limited. So you're paying a little bit for the rarity, not just the fact that it's silver and gold, but also that it's a collectible as well. Gold within itself isn't really necessarily a collectible. It's just it's a commodity, and that you can use to for trading with if you needed to. When you go to usmint.gov, you're basically more of the collectible side of gold and silver, but it's still great stuff, great quality. But anyway, that's it, guys. Own assets or get left behind. I mean, it's the flags are everywhere. The warning flags are everywhere. I mean, I don't know. You draw a picture any better than just open your eyes and your ears. Look around. Gold's through the roof. Now, it has just come back, and I think you're seeing that going to rotate into Bitcoin. Silver is done well. All these assets, you have to ask yourself the reason, why is it happening? It's happening because the dollar is becoming more and more worthless every single day. So, all right, that's the video for the day. Do me a favor, like this video, subscribe to the channel, hit that notification bell if you would, and I appreciate it. And if you would want to check another video out, there's one coming up here on the screen right now. Check it out. Y'all have a good day. Gen X Guy out. See you. Bye.